TDAQ, the newer fund from TappAlpha. Is it time to buy or sell this fund? Does it create monthly income? It has the Nasdaq exposure. It's a well-managed risk. It's a newer opportunity. We're going to break it all down if this should be in a retirement fund. Hey everyone, welcome back to the channel. I'm Doug the Retirement Guy with all your monthly ETFs. We're breaking down all the Nasdaq-100 funds to see which one generates the most and fits most profiles. So before we dive into that, I got to do a shout out to all of our Patreon supporters and all of our YouTube subscribers. Thank you so much for just being part of this channel. If you're not one of our 13,000 subscribers, don't be afraid to hit that subscribe button. If you like what we're doing, hit that like button. And best of all, if you can support the channel, go down in the description. You'll see a button there. It says Patreon. Go ahead and click that. You can join for free. You can make a small little donation, or you can join on a monthly program. Everything gives its benefits and values for doing what we're doing. So let's get into today's video of TappAlpha's TDAQ. We do have to do the disclaimer, and that is past performances don't guarantee your future results, and this information in this video is for educational and informational purposes only. I am not a licensed financial advisor. I am just one who's been studying this stuff for years. The example and suggestions discussed here are basically not suitable for all individual situations, so always contact a financial advisor before making financial decisions. Well, TappAlpha Innovation 100 is the Growth and Daily Income ETF. Now, this fund is actively managed, aiming to provide a balanced approach to growth and income from large U.S. equities. The fund holds long exposures to the Nasdaq-100 Index and writes daily out-of-the-money calls using zero DTE options. Now, the distribution rate that they post on their website basically comes in at 16.8, which is very impressive. A SEC yield actually is negative 0.19, and the past 12-month trailing distribution at 17.56. Now, the fund has about 6.3 million shares outstanding, which is not bad because this fund came alive in September of 2025. So let's go a little deeper into it and see exactly what's under the hood and how it really works. When we take a look at year to date, now I know this fund is not an entire year already. It came out September of 2025. So realistically, we're about 8 months into this right now. So I'm impressed that they have the 6.3 million shares already that they've sold. And there's been a lot of interest in this. And I know there's been a lot of review. We've done it a couple times. So this fund here, a 0.68 expense ratio, has a dividend yield so far, like I said, up to the 8 months that's been going at 9.54%. Pays out a monthly frequency. The high, $27.63. The low, $22.70. And currently, on Friday, the trading day is between $26.62 and $26.93. So very close to the top peak of it. As we see with a lot of NASDAQ funds, this thing has, it started to come down. It's probably had a struggling 2026 so far. Hit the bottom here in April, but rebound dramatically in the last 30 days. So it gives it a total return of 18.63%. Now we take a look at the year to date, which is basically from January 1 all the way to the end of April, to give you some information. You can see where it hit that April bottom and has rocketed very clearly, a couple different tiers into it, getting up to where it is today. The growth is 3.07, so still having a nice solid growth. The yield is continued though at 5.37%, giving this thing a total return of 8.94% in the year to date. So depending on when you purchase this, you're looking at like you have some good solid growth and yields coming in equally. When we take a look at the holdings, now this thing here, they do something a little different. They're buying right into that QQQ, which is the Invesco QQQ Trust series, which is really basically the Nasdaq-100 total match. You go through, you can see that they have some relying cash sitting on the sidelines through the First America Government Obligation Fund, and then you have their different pieces that they're doing. They're covered calls in the setup for the income generating. When we take a look at the dividend chart, now again, newer fund, watching it through, they've settled themselves down, but we're slowly seeing a decline in actually the amount that they're paying. Their average is about 37 cents. So when I look at the dividend history that they have out there, we're about a penny off here or there, but 3 cents off since the first payment of October. So I'm comfortable with seeing what I'm seeing here. I'm okay with it. But my question will be, are we going to continuously see a decline, or are we going to see this thing bottom out 35 cents? That's what we're looking for in retirement, is something that a consistency in paying, a consistency that we're getting each and every month. We're getting virtually the same type of amount. So they're slowly showing us that they are doing that. How are the taxes handled in this account? Now, this is a benefit that they have right here, that the Section 1256 contracts, which is what we call the 60/40 rule. The TappAlpha is primarily generates income from selling those daily covered calls on the Nasdaq-100 Index. Because the index options, which are the 1256 contracts, the payouts are really given to you at 60% long-term capital gains, which is the lower tax rate. 40% of it is going to go to you for a short-term capital gains, which is normally classified as ordinary income. So why does this matter? This is a significant more tax-efficient way, other than income funds paying out 100% in distributions that are taxed at ordinary income. So if you have this in a brokerage fund, definitely going to be a lot more beneficial for you by having these select contracts. Now, they also implement a return of capital, or exactly is in their system for that. So return of capital is a kind of, I always say, is a double-edged sword. We've done a video on this, and you can definitely go back to our history and see that the ROC, so you can understand if you don't know how this is. But basically what they do is it's a tax-deferred way that ROC distributions are not taxed in the year that they're received. Instead, they reduce your cost basis to lowering your cost per share that you've paid. Now, you're still getting the distributions into your pocket and everything's in, so it's really more of an accounting type system. And the trade-off is eventually you'll pay taxes on the money when you sell the ETF, but it shifts the tax burden from a high immediate tax rate to a capital gains rate into the future. So it's another positive that's basically trying to work off of that 40% category to get this even less taxes across the board. Very impressive way of doing it. It's very common in ETFs. It's nice to see that they do offer that in both ways. When we take a look at the total return year to date, they're 8.94%. I've seen this pattern so many times in some of these ETFs, and it's been very interesting to me watching this. And I'll tell you what gets me interested. If you look at the line before the April drop-off, we were bouncing basically from a 0% to a -3, between a 3 and 4% negative rate. So you're looking at that saying, oh man, this is not as good as I thought it was. But the problem is that the fund had no clue, no direction where it was heading to, where it was going, or anything. And then the government turned around and said, look, we're invading these different countries, we're gonna go into war, we're gonna do what we did, had a quick response, and now everybody knows the direction that we're heading to and what they can see the future, and the fund is taken off and going accordingly. Now we're into the positives, 8%. So I look at this and say, if you bought any time in late February, early March, you're probably now seeing some huge benefits in buying of the fund. When we look at the fund across the board so far this year, we've bounced between that 2% positive and realistically 12% positive until we got this real sudden jump all the way through, getting us up to 18%. So it just tells me that the fund, will it hold these kind of numbers, or are we going to come right back down to that mid 15, 15 range, 12 range, somewhere in there? It's hard to tell until we get more history under our belt of exactly where it's going. But overall, it definitely shows that it's definitely a positive growth across the board. So is this one good for retirement? It's, again, we don't have 12 months into this, but I would put it more into my income category. If you're familiar with what we do, is I use a 3 bucket retirement system. One is for foundation, one is for growth, and one is for your income. And this fund here, you could actually put it in both the income and growth section, but I really like it in the yield and the grow in the income side of it, because that yield at 9.54, it shows that it has the ability to continue to pay this on a regular basis, and it shows that the growth is going to follow and come in with it. You look at the total returns numbers, and I'm very impressed with what we see so far. If someone told me I want to put this in growth, I wouldn't have an argument to it, because you could take that yield and basically roll that into buying more and more shares using a drip. Very positive that way. So let me know what you think. Is this fund good for retirement? Do you have it for your retirement? Are you using it for income? Are you using it for growth? How are you actually using it? I just think this is a good fund across the board. It's kind of one of those that's always a go-to for me, is to look at and say, does this fit a customer or client's portfolio? Does it fit your balance? This is one thing I always look at and suggest to people as well, that this may work, this may not fit. It's all how you fit, because it is a Nasdaq-100 full obligation type application. Let me know in the comments below. Love to hear what your thoughts are, and definitely hit that like button if you like what we're doing.
Thank you for watching. Press the